Hello guys, welcome to another lesson on simplified technical analysis. And in this lesson we are going to be discussing charts, candlestick and time frame. Alright, so everything you see here when you open your TradingView app or the web terminal, everything you see is the chart. You know about chart. We learned chart in our primary school and secondary school. So this is the chart represented in pictorial form using the candlesticks. Okay, so each candlestick in the chart represents a time frame. All right, so you see how these three things are interrelated. So the charts, you have the chart, and in the chart is made up of candlesticks, and each candlesticks represents a time. Okay, and that time is a time frame. So this means that each candlestick here represents a time based on the time frame you have chosen. So if you come over here, you will be able to change the time frame. Okay, here is 1 second, 5 seconds, 10 seconds, 15, 30, 1 minute, 3, 4, 15, 30, 45 minutes, 1 hour, and it goes like this to almost to around 12 months, which is a year time frame. Okay, so in a year time frame, you are seeing the market as it is. Like one candlestick will represent a year, so it will show you whether a market was bearish or bullish in that year. Okay, so each candlestick, like I said, represents a time. All right, and we have two types of these candlesticks: the buy candle, which is otherwise called the bullish candle, or the red candle called the bearish candle. All right, so let me and a candlestick, right, is made up of body and wick. So this body and wick have their significance, right? So here is the body, this big part of the candle, and then these ones that look like a line, you know, is the wick. Okay, so the candlestick is made up of a body and a wick. All right, so there are different types of candlesticks, right? So each candlestick shows it sends a message, it represents a message, it shows how traders were able to perform in the market. Okay, first of all, the candlestick opens and it has an opening and an ending. Okay, so it opens. If it's a bullish candle, which is the green candle, right, the buy candle, it opens at the bottom and ends at the top. Okay, so here will be the candle opening, here will be the end of the candle. So when the candle ends, another candle will open. Okay, so like we are in 1 hour time frame now. Okay, so this candle opens here, and from here another one will open up. You know, it opens here and goes up and gets weak here and opens another one after the expiration of 1 hour. Then this one gave a bullish momentum and then, you know, came back here and ends. So a candle doesn't end with the wick, rather it ends with the body. So here is where the body of the candle ends, and that's where another one will start. So if it were to be a bullish candle, it will start from here and go up, but since it's a bearish candle, it starts from here and comes down. That means a bearish candle, that is the sell candle, the red one, opens at the top and ends at the bottom, right, while the bullish candle opens at the bottom and ends at the top. So underscore that, take note of that very well. Okay, so like I said, each candlestick represents a time frame. A time frame is time, the normal time that you know. So there are many time frames based on your preference. We have 1 hour time frame, 15 minutes, 30 minutes, 30 minutes. There are many time frames like I've showed you here. Okay, so any time frame you choose, the market will change to that time frame. That means each candlestick now will no longer represent the former time frame, but rather the current time frame you have chosen. So here we are in the 1 hour time frame. Let me switch to the 15 minutes time frame so you can see. So here I'll switch to the 15 minutes time frame. So each candlestick now represents 15 minutes in the market. So it opens here. Let's say this one opens here. After 15 minutes, it ends here, and another one opens after 15 minutes. This one ends, and another one does what? Open. Okay. So when do you use time frames? When do you use time frames? It depends on your preference. It depends on what you want, but basically if you're looking to see a wider view of the market, right, if you're looking to see what the market has performed in a long period of time, you want to get an overview, a wider overview of the market, it's best to use a higher time frame. So higher time frames are from 15 minutes time frame down to 1 year, okay, while lower time frames are from 15 minutes down to 1 second. Okay, some people regard 15 minutes as lower time frame, some also regard it as higher time frame, but some also use it both as lower time frame and higher time frame. So for me, I think the 15 minutes time frame is just in the middle, and is best if you are a day trader. 15 minutes time frame is what you want to look at, okay, in combination with the 1 hour and 5 minutes. Meanwhile, if you are a scalper, a swing trader, you'll be looking at the weekly time frame, monthly time frame, 1 hour and 4 hour time frames, okay, and then you may use the 15 minutes for your entry confirmation. All right, so the next thing is, okay, what these candlesticks, the main message they send across. So as you can see, these candlesticks are formed in different ways, right? So I'm simplifying this tutorial so that you don't get confused. No need of learning all the names of the candlesticks. What you need to know is what they represent, okay? So when you see a bullish candle like this, or a bearish candle like this, okay, that is very long, with little wick, like this one here is very long with little wick up and down, okay, now that is signifying a strong volume, that is a strong momentum. So if it's a bullish candle, is a strong bullish momentum. If it's a bearish candle, is a strong bearish momentum. So what I mean by momentum is the buy or sell power. So if it's a green candle, that's a bullish candle, it signifies a great buy power. That means a lot of buyers are in the market, okay. If it's a bearish candle, it means a lot of sellers are in the market, like here. So a lot of sellers are in the market, and what happens mostly when you get these candles are what follows them are uptrend, because the market is going to be pushed up if it's a bullish candle. But if it's a bearish candle, like this with big momentum, it means a downtrend is coming up, like there are more sellers in the market, the sellers are dominating the market, okay. So as you can see, after this big momentum candle, we saw a clear downtrend and another big momentum candle here, okay. So another candle you should watch out for is the reversal candles and indecision candles. So these candles here with little wick and little bodies and long wicks, okay, they are indecision candles. These are moments where nobody is actually controlling the market, neither the buyers nor the sellers are controlling the market. Basically, what happens here can be retail traders trying to take advantage of the swing movement in the 1 hour, in the 1 or 5 minute time frames, okay. And retail traders don't move the market. Those that move the market are the big traders, that is banks and institutions, okay. So here, these kind of candles, when you see these kind of candles, they are reversal candles, indecision candles, okay. So these other ones, these big ones, are big momentum candles. And whenever a candle like this, whenever you get a big candle, a big momentum candle before a small candle, let's say this one is a bullish candle, if this one is a little bearish candle, this will be called an engulfing, a bullish engulfing pattern. Okay, let me see if we can get something like that. Okay, let's use this one for example. So this is a bearish engulfing pattern candle, because this bearish candle here is engulfing this little bullish candle. Okay, so these are the important things you should know about the candles, right? So no point in learning the name of the candles and memorizing all those things. You can do those ones later, but they don't add to your profit or your loss. What you need to know is what the candles represent. Okay, like I've told you, these ones here that doesn't have any wick, that have small bodies and little wicks, they are only representing they signify an indecision or a significance of trend reversal. Okay, so if we are in an uptrend and you begin to see indecisions like this, that means there may be a trend reversal. So in an uptrend like this, let me show an example. In an uptrend like this, and you begin to see candles like this, right? You begin to see indecision candles ranging for long. That means there are going to be a reversal. Okay, most likely there is going to be a reversal in the trend. So that reversal will be that we go from this one to now a downtrend. So we basically reverse from going up to coming down. All right, so that is it. Is there any other thing we have not covered in this candlestick charts and the time frames? Okay, I don't think so. If there's something else you don't understand, you are free to always send a DM and ask. Okay, so just a recap: when you open your chart, when you open your platform, what you see is the chart. Okay, this is the chart, the market chart. So inside that chart, what do you get? You get candlesticks, and these candlesticks, what do they represent? They represent times and actions of traders in the market. As the time goes, it represents actions of traders in the market per time. Okay, so the green ones are the buy candles, right? While the red ones are the sell candles. So when a market is pushing up, you will see green candles like this. Okay, and a candle is made up of two parts, the body and the wick. So the body is the big part you see, the wick is the small ones like a line. All right, so when you get a very big candle with big body, is a bullish candle. If it's a green candle, that's the buy candle. If it's a red candle like this one here, is a bearish candle. All right, so a bullish candle represents shows a buy power, while a bearish candle shows a sell power. Most of the times, after you see a bullish candle like this, what follows up is a big push up in the upside. Meanwhile, when you see a bearish candle like this, what follows is a big push down, like in the downside. Okay, just like we have seen it here. After this candle, we see a big push up here, and after that push up, you see a candle here. So after this one, after this candle played out, what did you see? A push down. You see a push down. All right, so that is it for candlestick. And the other one is when you see candles like this with small bodies and wicks. Okay, it shows a trend reversal Okay, that means if you are going up before and these candles begin to appear, that means there is indecisions in the market. Nobody is actually winning the market at the moment. So what we follow is a trend reversal. All right, so as you can see here, the market went up, showed these signs, and then what else we got was a what push down. All right, so that is it for candlesticks, charts, and the time frames. Okay, for the time frame again, you can use any of the time frames you want, but basically we use the higher time frames to get a wider overview of the market, what's happening in the market, and we use the lower time frames to trade short period of time in the market. So if you are doing day trading, 15 minutes time frame, 5 minutes time frame, 1 hour is for you. If you are doing swing trading, you are looking at the 1 hour, 15 minutes, 4 hour daily time frame and weekly time frame. All right, so let me go to a weekly time frame. Let's see how BTC has laid out in a weekly time frame. So I have switched over to the weekly time frame, and now you can see what BTC has done in a weekly time frame. So here it means that each candlestick here will now represent 1 week. Okay, so after the end of this week, a candlestick will end and another one will open. Okay, so with this weekly time frame now, you can actually see what the movement of BTC in a long period of time is. So looking at it, you can see that BTC is coming down to a position like this. Okay, so it's currently at the place it was in December 11th 2017. Okay, so the place Bitcoin is now is exactly where it was at December 11, 2017. Okay, so here we are in 2022 December 5th, right? So you can use the trend line to see that it's still uptrend. It's still an uptrend, although it's coming down from here. Okay, this is the highest high. The highest high of Bitcoin was on November 8, 2021. Okay, that was when Bitcoin went to all-time highs. So from this all-time high, we have been going down since then to where we are now. Okay, so you can say that Bitcoin is currently in a down trend. So we are in a bearish market. So this is how you use this candlestick in a higher time frame to know the actual direction of the market. Okay, so until we begin to see higher highs here, Bitcoin is still in a downtrend, which may continue up until somewhere here. Okay, all right, that's it. If you have any question, you are free to always send in your questions.